At the company, at businessfunds.com, we deal with three primary products: working capital,
Line of credit,
equipment financing. Right. And they're all used in different situations, different scenarios that business owners find themselves in, which are very common, right?
Correct.
If you needed just capital, you needed to do a marketing campaign, you needed to float a project, you needed to scale, you wanted to buy the business next to yours because you were expanding your offices, whatever you're doing, you'd want to use cash, right?
Yeah.
When you're buying a piece of equipment, new or used, it can be used, doesn't matter. You send us the invoice, and we're able to collateralize the loan with that specific piece of equipment or multiple pieces of equipment. Multiple invoices are fine too.
Yes.
So God forbid you default on the loan, yeah, they come and collect the equipment. But because there's less risk, because they can come collect something, not like the working capital loan, the working capital loan is just based upon your future receivables and how you've done with your bank statements recently with your cash flow.
There's
right?
a little bit more risk for the lender, of course.
Right, there's more risk for the lender. So because you can collateralize the loan with the piece of equipment only, they're able to stretch it out for like 5, 6, 7 years sometimes. Monthly payments, really low rates,
good
because
rates
it's less
because
risky.
it's secured by the equipment.
By the asset.
Yes, exactly.
Yeah. When you're able to do that, there's less risk. And what I always tell my clients is lending is based upon risk. So the payment and the cost is correlated directly to the risk level. So when they apply with us, we look at their business credit, we look at the piece of equipment, we look at the age of the equipment, what it's going to be doing. Sometimes, an asset like a bulldozer will not depreciate as fast as maybe a rock crusher.
Correct.
Or maybe something that's going to be used all the time where it's going to wear down. So, when we're talking about software, we're usually looking at like 3 years on monthly payments. When we're looking at like construction equipment, we're looking at 5 to 7 years.
Yeah,
on
or
those
the
equipment
X-ray
purchases.
machine or a mammography, MRI. It depends on the equipment that you're acquiring. So, but like you said, it's a lot less risk for the lender because it's secured by the asset. So, and that actually makes me think of we just mentioned on opportunity. Like let's say, for example, let's say a contractor, construction, right? And they're making bids on potential projects.
Okay.
But let's say, most of the contractors out there, typically they'll charge a fee up front to the homeowner or their client so they can start like for materials, subcontractors, and they'll charge something up front and that's on the bid, right? But let's say they have capital, let's say they have a line of credit where they can float the whole job and don't charge anything up front. I mean, the likelihood of their winning the bid, it's higher because the homeowners, you were just telling me about a client of yours that was doing exactly that.
They're owed on their previous projects. They have net terms 30, 60, 90 days, and then 90 days hits and they're still not paid. They have this accounts receivable report that keeps, adding to it. And, when you're not getting paid by Peter, you can't rob Paul to get the next project done. So, what you can do is you can leverage your business credit, float the money to get the project done. When you get paid from your accounts receivable report, from your AR report, and the money comes in, you can pay off that line of credit, and there's no prepayment penalties.
Yeah, so you only pay 2 months of interest.
Right,
Say,
and you're winning those bids, like you said. With contractors, they're constantly bidding for jobs, constantly, and it's very, very competitive. So a way to win a bid is to say, look, you don't need to pay for materials. You don't need to pay me any upfront costs. I'm going to be able to get this done to 30%, 50% done before you need to start paying me at all. So that buys you a little time. It wins you the bid. You keep those relationships, and you're able to scale your business without being withheld from scaling because this guy's not paying you.
Yeah.
Takes away the stress.
Basically, you're not at the mercy of the receivable actually coming in because what if a receivable gets delayed for X, Y, C, reason, and you were counting on that.
Right.
Now you're in trouble, right? So,
and we've seen this time and time again, and it's across all industries. I mean, we've talked about some contractors here. but we work with, medical, restaurants, contractors, wholesale distributors.
Do you remember, what was it, a couple of years ago, the whole, it was United Healthcare that got hacked.
Right.
Oh my God, yeah. All my medical clients were freaking out. Why? Because they had to wait, some of them 6 months to get paid on their billing for, all the clients that had, on their Medicare. So it was a rough time. Some of them didn't make it actually because they didn't have access to funds.
Yeah.
But we were able to help the ones that actually did come to us, and we got a line of credit for them that floated payroll, operating costs,
and it's the clients
rent.
that prep for that kind of disaster. They're not waiting till they're in true dire need and we need money for payroll tomorrow. Now we can do that, but that's going to be more risky of a deal. Most likely your bank statements are suffering already. You have some negative days, you have some overdraft fees, you have maybe just low cash flow for the most recent month, and that's going to affect you. So when people call in, we usually tell them, let's prepare, let's build your business credit to the point when you really do need it and you need that $400K loan. Let's start with this $20,000 line of credit. Let's start building your business credit.
You have
so
a
when
little
you
bit
get
of history.
The big dollar amount, it's going to be cheaper.
Yeah, no, and you have history with the lender and business credit built up.
And you can get funded like that.
And the next one's going to be easy. Each deal that we do after the initial one gets easier, better terms, lower fees.
Usually on the second, third round, they can get like 0% fees for life. That's how it works because the lender sees it as less risky. Risk is correlated directly to cost.
Correct.
So less risky, less cost, more risky, more cost. So when people call in, what's the first thing that we're asking them?
Yeah, the first thing that we're asking them is, how is your cash flow? What are you using the funding for? And when do you need it by? So the timing of it as well. Some clients, like you just mentioned, I need it tomorrow because I got payroll and the big check didn't come in. Yeah. So, and yes, we can still do it, but it's going to be a higher cost loan.
But we would way rather give a client funding that has a special opportunity.
Exactly.
That has a plan to use the working capital. Now, one of our most popular products is working capital because it's just straight cash. Cash is king. We all know that. You're able to use it for whatever you want. We don't track what you do with the money. We say that you need to use it for business expenses.
Yeah, and there's no restrictions on how you're using the money. Yeah, there's nobody's eavesdropping on your checking account to see or auditing, the how the funding was spent.
Right. Yeah. And a lot of clients, they call in and they don't know what product or what program that they need. And that's where we come in. We have personal business finance consultants, funding specialists that can work with you. And we ask, what is the need? What is the timing? And then we say, this is going to work best for you. If you're buying a piece of equipment, you're not going to get a line of credit. You're going to get an equipment financing loan.
Exactly.
Monthly, over 5 years, 7 years, something like that.
There's
line of credit, we're going to go, hey, 24, 36 months, because the timing is that they need money throughout their project. Every 20% in, they need 20 grand. 40% in, they need another 20 grand. So they're going to pull from line of credit, and when they get paid, they can pay that whole thing off, no prepayment penalty. So the interest just drops off.
Absolutely.
And even on the term loans, like say they're not qualifying for a line of credit, sometimes it's just not what you need or what we're custom tailoring it to fit your need and the timing. Sometimes you only qualify for maybe like a term loan. So what we do is we'll try to set them up on a term loan that has maybe an addendum that has early payment options, so they can save a lot of money. So when they do get paid, they can bring down the total cost of the funds by doing so.
Yeah, and that matters. That matters.
And that's what we specialize in, because we have the best lenders. Some of these brokers, they're offering 9-12-month options, daily payments.
Well, they don't.
And they're strapping these business owners.
Yeah, they don't care about the loan being beneficial to the client or even making sense. They're just worried, or they care about the commission, unfortunately. And it comes back to the point of do what's best for the client, not for yourself. Think about the client first, and then it'll eventually, some might argue that, you need to look out for yourself too, but actually you get more and it multiplies.
It's funny how the world works that way.
It is. But then, by it's important that you go with someone that is going to give you the right advice and have an exit strategy for that same loan or for the next one. So if you have a client who says, "Hey, I need it for payroll because the receivable didn't come in," well, when do you think the receivables kind of come in? Well, it's going to come in within the next 60 days. Well, let me give you this deal that, yeah, it may look expensive on the surface.
If you took it to term.
Exactly.
But
if
you're
you
not
take
going
it the
to.
full term, but when the receivable comes in, you pay it off, take an early payment incentive. So you got to make sure that that program has an incentive for an exit early. And
That's
then
why we
you
ask,
minimize
what's
cost.
the need? What's the
Exactly.
timing? And we custom tailor it to
Yes.
that need, not just these are our products. Do you want it?
Yes.
We do more than that. Even like personal credit, we'll take a look at it. We'll do a soft pull. We'll take a look at, and again, this is no cost, no obligation. We're able to just do this for people. So we go in there and we'll say, look, you have one position, two positions on your bank account already. We fix those situations too. So if you have gotten worse advice, we're able to come in and fix that situation, put you in a better cash flow situation, stretch out, buy out, the loan that you currently have or the loans that you currently have, stretch it out over a longer period of time, give you more money, make your payments smaller, lower origination fees, and that's because we do enough volume to keep up with these lenders and keep these relationships intact. These smaller brokers, they can't do that. Even with the personal credit too, we'll look at that and say, look at all these credit cards that you have out. They're all maxed out. They're all $20,000 credit cards.
Did you use any of that for business?
They didn't go to Nordstrom's and buy a bunch
No.
of clothes. Most likely, if you're a business owner, you are leveraging your personal credit. You are leveraging your family, your home, your FICO score in order to run your business, in order to scale your business, in order to do what entrepreneurs do, is take risk. So why not put the risk on the business? Leverage the business. Don't leverage your family. Don't leverage your home. Don't leverage your personal credit.
In
So
fact-
we'll tell you what to do in that situation as well.
And
or advise you.
Yeah, and then most of the programs, they're unsecured as well. We have access to unsecured funding where you're not even pledging assets, collateral,
It's a different kind of
tangible.
lifeline.
Exactly. So you're not leveraging the business so heavily when it's unsecured funding. So, in fact, one of the advantages to our company, businessfunds.com, is that we have our own in-house underwriting team. So we know the lenders like the back of our hands. We match the business with the lenders that you'll qualify with. But not only that, we'll make the lenders compete for your business.
And it doesn't ding your business credit. It doesn't ding
No.
your personal credit. Nothing like that.
It's
So
just a
it
soft
really
pull,
is
one
no
soft
cost,
pull,
no
yeah.
risk, no obligation. You're able to get a solution presented to you transparently.
And if
You're
it makes
you're
sense.
fully educated, and sometimes you'll even walk away with a game plan on what you're going to do next 6 months from now.
Yes.
Not even to repair this need or to fuel this new opportunity that you have, but game plan for the next move. You want to have two or
Yes.
three moves ahead. You want to be ahead of the game.
Yes, well, that's business 101, right? And I always tell my clients, I'm not looking just to do this deal that we have in front of us. I'm thinking about the second or third deal or subsequent deals that we're going to be able to do together if we make these moves. But obviously, like you said, no cost, no obligation. We'll
Give us a shot.
we'll analyze your current situation and need, and advise you on it. And then if it makes sense, let's move forward. Sometimes it won't make sense, and we'll tell you it doesn't make sense. But if you make these moves, we can make a deal happen in a month or 2 or 3. So sometimes the best move is not to make a move at that particular point in time.
And
And
what do
being
we-
able to tell your client that is what makes a difference.
Yes.
Yes.
And what do? We always say, take what you need when you need it. So, a lot of these lenders or brokers, they will
Try to maximize the full approval amount because they want to maximize their commission.
And
Yeah.
say you're getting cash, you're taking working capital, you're approved for the maximum funding size. That's what we do. We approve you for the maximum funding size available. Say you're a $1.2 million business per year. You're qualifying on a general rule of thumb from 10 to 25% of your revenue for the maximum
On
funding
average,
size.
yeah.
So say you get approved for 150 grand. take what you need when you need it. We don't want the working capital hitting your account, accruing interest on a higher dollar amount that you're not
Just to be
putting to
sitting
work
there.
right away. It's working capital for a reason. You're supposed to put the capital to work
Yes.
right away. So if you don't have an idea of what you're going to be doing with the money, we're not going to advise you to take all the money. You're going to take what you need, and then what can you do? You can come back, and you're going to be with the right program where you can do a concurrent deal. You can take $20,000 now in 3 months, take another $50,000 out of that $150,000 full approval, and you can come back one more time and take the rest of the money 6 months down the line when the project's 60% done and you need a little bit more funding to get it done, and that's going to cost way less because then you can pay it off early when you complete the project and you get paid.
And that makes sense.
This is what we do.
Yeah. Yeah, exactly. You want to talk about the requirements, qualifications, paperwork?
I do.
Yeah.
You know, when we're talking about working capital, when we're talking about the line of credit product, 3 months of bank statements, sometimes 4 depending on what state you are, 3 months of bank statements and a single digital application. We ask you for what? Your address. We ask you for your business address. We ask you for your EIN number.
Correct.
We get you approved based on just those qualifications. So what we're able to do is we look at your bank statements and we say your last 3 months, your last 4 months, sometimes a little bit more if we need it. But usually the last 3 months will capture enough information to where we can look at it and say they could borrow, if they had a loan during this time, they could have borrowed X amount of money and paid it back in a healthy, low impact,
Manageable way.
Manageable way. So, you know, we're putting them in a position to scale based upon how they have been doing. Because
Exactly.
what you have done in the past usually dictates how you're going to behave in the future.
Yes.
And that's how
true.
credit works too, personal credit. So we look at personal credit and we go, you have a score associated with that, a FICO score associated with that. A business credit has the same thing, has a
score,
business credit
yeah.
score. So that really speaks to how you're going to perform in the future. So lenders look at that. That is what they assess the risk with the file. And then they put an associated cost based upon the risk, because risk is correlated with cost, based upon how risky you look. So here at businessfunds.com, we send you to the right lender who is going to, we know their guidelines, we know what they're looking for. So we present you in a certain light and say, here you go, look at this. They have a plan for what they're using the money for. They've taken this type of loan before. They plan on doing this with the money. This is how they're going to scale. And that's how we get them the best deal.
Yeah, and
we negotiate on their behalf.
Yeah, and that's actually important because we take the time to analyze the file, look at the banks. We have our own in-house underwriting team who looks at all that, then brings the file back to our desk, and then we put a write-up together.
Yeah.
To present, when you mentioned we present you in the best light, that's when we paint the picture to the underwriter. This is what we're trying to do. They have this situation right now. The money is going to be used for X, Y, and Z, and this is their plan on this project. So the likelihood of the client getting approved and getting better approval terms is higher. But not only that, we make the lenders compete for your business too. So once the underwriting process, which is only 1 day, and once we get your documents in, 3 months of bank statements, sometimes 4, and the application, it takes 1 day for that process. Then we present every single offer and approval that is in front of us and your business qualifies for. We'll go through each one, and then at that point, we'll have the conversation of what makes the most sense at that point, and funding can occur within hours after that.
Same day.
Same day, yeah.
Yeah. So, once we get the bank statements in, the application, it goes to the lender or lenders after we pre-underwrite it in-house and make sure that we're not going to be sending you to a lender that's just going to decline you right away. We're going to make sure that you have a shot. You're going to go up there. We're going to get you the best offers in front of you. We discuss it, transparent. You're fully educated. You get to make a fully educated decision at that point for your business. And then here come the contracts. They're usually DocuSign or like an online checkout type of situation with some of these lenders where you answer a couple security questions, click, click, click. The money's in your account that day or the next one.
Yeah, it's electronically transferred via ACH. So, once the client determines the option that they want to go with, if it's early enough in the day, we can fund and wire same day. So the funding will be in your account within an hour or two after we fund.
And you would never want to go into that kind of process blind. and you're applying at these different lending companies, you're just Google searching for business loans, whatever you're doing, you're going to end up damaging your business credit. You're going to be getting calls from everybody
under the sun,
from New York to Michigan, everybody that does this. You're going to be hearing from all walks of life. You're going to turn on your cell phone, and you're going to make it to where if you don't know the number, it goes straight to voicemail because you're going to
be screening your calls. Yeah, so it's not a good
this
thing.
Industry, you do not want to open up Pandora's box. And what you're able to do with us is keep it small.
Yeah.
Keep it simple. You're able to get the best offers and the best terms. I mean, the definition of wisdom is knowing what you don't know. So if you're not a finance expert and you're a contractor, if you're a medical professional, a lot of times they're not the best with finances. Talk to us. Let us match you with the right need.
Yeah.
Let's match you with the right lender. Let's talk. Let's have a 10-minute conversation and get you into the right position, and then set you up for the future too. So it's not always the first time.
Yes. You know what? My dad, who recently passed, he had a saying. My dad was a business owner, and he always used to say, in business, you got to have 3 people: a good finance guy, a good attorney, and a good CPA. We want to be your finance guys.
I love that.
Yeah. Yeah. So, and that's what we do. We focus on the relationship. Like I said before, we want to do 2, 3, 4, 5, 6, as many deals as your business is going to need over the lifespan of your business. We want to be your finance gurus. You know, we want to be the experts that are going to advise you in the best, to have the best possible outcome.
And that's why we love working with CPAs, and we love working with the other branches of who you need to trust. Your dad's a very smart guy. If you're working with your CPA and you're working with your attorney, they might know lenders, but they probably don't. So because you trust them, if they're referring you to somebody like businessfunds.com, they're setting you up for success because you're not going to be getting played. You're not going to be a new customer. You're going to be in a relationship with a lender, with a banker, and this is, what, 2025? I don't want to date this podcast, but this is 2025. Nobody wants to go in the bank. You don't know anybody at the bank. You don't. It's not a.
You're just a number.
Right.
Yes.
And you know when you call us, you get a dedicated personal finance consultant. Right then, what is it? 15 seconds. It's an average pickup time for us.
Yeah.
So we're always picking up. We're available at all times during the week.
It's not going to be
Saturday
a bot.
and Sunday, our guys are picking up. You're going to get that personalized service, and you're going to develop that relationship. So you are going to know somebody. You're going to know somebody in the lending industry, and you're going to stay with them. And that's why we love working with CPAs. We love working with attorneys because they can turn their trust into dollars with referring business to us too.
And that's what we love.
Yeah.
You know, we love. I mean, God, some of my clients even invite me to their kids' weddings. You know, just like 6 months ago, a client of mine in Florida, he was, unfortunately I couldn't go, but yeah, you know, it's we become more than just, you know, your finance guys. We even, you know, become part of the family sometimes, and that's a beautiful thing.
Yeah.
Yes. So, yeah.
With that, Gabe, you know, I just want to go ahead and sign off on this one.
Yeah, man. Hey, well, thanks. It's
Great points.
Yeah. Thanks for this. It's actually good to talk about, you know, what you love and share a little bit with everybody out there. So, yeah, thanks for this, man. I appreciate it.
Thank you.
All right.
And thank you.
Thank you, guys.